This show is provided for entertainment and informational purposes only. It should not be relied upon as legal, business, investment, or tax advice. Neither the hosts, guests, nor any funds they may manage intends to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies.
It's an unfair game.
They're schemers. Schemers trying to control their little worlds.
Please, speak as you might to a young child or a golden retriever.
Rich get richer, that's the law of the land.
I owe you nothing!
It's just money.
This is madness!
Everybody just yells and screams at each other. Nobody's civil anymore.
That's not the kind of humor we do on this show.
Put that coffee down.
I drink your milkshake.
Now you're looking for the secret.
There can be only one.
Everything becomes chaos.
Can you dig it?
Brent Johnson, how you doing, my friend?
I'm good, man. How's it going?
It's very good. Welcome back to another episode of Milkshakes Markets Madness Show. We are going to spend a little bit more time on this one talking about markets because what a difference a week makes. There's so much that has happened. We kind of ended last week with the Fed raising overnight lending rate, but there's always that lag effect, and we definitely kind of felt that this week. So we'll get into that. But before we do, and we start going down the markets rabbit hole, because this show does have a bit of a randomness and madness to it, let's jump into some of that stuff first, because it was actually a pretty mad week in sports. I'm going to mention a couple things that happened which were pretty wild. I know you're a big sports fan and like poking fun at different teams depending on who you're supporting, what you're watching. But the Minnesota Vikings, I'm not sure if you saw that game, but they came back against the Indianapolis Colts, 33-0 deficit at the half. Did you catch that game at all?
You know, it's funny. I didn't watch the game, but I was having coffee with somebody, and they asked me if I had seen it. I said no, and they were like, "Yeah." When I stopped watching, it was like 30-0, and I thought it was over. And then I went back and looked at my phone later, and they had lost. And so he was asking me if I'd seen it because he wanted me to explain it to him. So I happened to miss it, but it sounds like it was a hell of a comeback. Yeah,
I mean, the Colts just can't figure their stuff out. But, as an Eagles fan, I'm carefully watching what's going on in the NFC and who's kind of doing what and what position they're taking now in the playoff hunt. So that one was kind of interesting to watch unfold. What's interesting from a market standpoint is the probabilities of that happening. At the point that they went into the third quarter, down 33-0, the probability of them winning was 0.4%, 0.4. So Indianapolis had a 99.6% chance of winning. It's the second lowest in eventual win for any team, as long as the NFL's kind of had this like intense statistical network. So that's pretty wild.
Well, that's why I always tell people, nothing is ever certain, right? It's like, don't get married to anything. Nothing is certain. Crazy thing. That's why you have to play the game, right?
Absolutely. I think that's why people love sports too. At the end of the day, is anything can happen, and there's, in the case of American football, there's 4 quarters. Another interesting event: Alex Ovechkin with the Washington Capitals, who's pretty much a goal scoring stud. He got his 800th goal. He surpassed Gordie Howe on the all-time goals list. That's pretty intense. So he's got enough life left in him as a hockey player. I mean, what a violent sport. Anything could happen, but good chance. He typically is 40 goals a year, or gets pretty close to that every year. Sometimes he has crazy years. He puts up 50, 60 once before. It's most likely he's going to surpass Gretzky in the next couple of years. So that's pretty wild. So that was a big milestone for him, and he actually scored a hat trick on that day. And then we were talking about the World Cup for a while, and that's finally now behind us, and Argentina won. Did you catch the finals?
I did. I was at my son's volleyball game. He plays volleyball here in Puerto Rico. It's like the biggest sport. And so we were watching on our phones while we were watching the volleyball game and saw Argentina go up 2-0. So we thought this kind of over. and got in the car to come home and turned on the TV, and it was 2-2. So I missed the 2 goals by France in the second part, and then we saw the goals in extra time, and then the shootout, obviously. So amazing, right? And nothing's going to get done in Argentina until like July at this point. So you can just write them off for the next 6 years.
Yeah, nothing really gets done in Argentina anyway. And God bless them for that. So we kind of introduced this people losing their minds segment last week, which is kind of an infamous hashtag of yours. Some interesting people losing their mind moments this week. There was a article about Sean Penn saying it's time to send unvaccinated citizens to jail. Do you have any thoughts on this still somewhat polarizing topic?
I mean, it's just ridiculous. Again, if you want to get vaccinated, go get vaccinated. But the idea that you should be able to force someone else to get vaccinated or throw them in jail, I mean, it's so ridiculous, and there's literally people losing their minds, right? I mean, they're supposed to be so woke and open to new ideas and not set in their ways, and then they want to send somebody to jail because they didn't get jabbed, despite all the evidence to the contrary that it might not be good for you. So again, if you want to get jabbed, go for it. That's totally fine. But to mandate somebody else does, it's typical Hollywood stuff.
It is typical Hollywood stuff, and I think that's kind of the irony. It's the woke actors that, and even musicians. I mean, Neil Young was losing his mind over this at one point, and having his music pulled off Spotify because of Joe Rogan, and it's all these guys that are just like entering the stage of life where they completely forget what their identity was. Keep on rocking in the free world.
I did like it. I don't know if you saw Tim Robbins came out and he actually retracted some of his comments, which I thought was a great thing. He said, listen, maybe I reacted too early. I was saying people had to get vaccinated. Now that I've seen some of the evidence, it's not quite as clear, and maybe people shouldn't get vaccinated. So, I was actually happy to see that. So you don't see that very often. So maybe he lost his mind in that regard, right? Maybe he did the total 180-degree turn there. But, the Sean Penn thing is just ridiculous.
Yeah, well, people finding their minds might be a different segment altogether. Well, look, like I said, it was a crazy week. We had maybe I'll just hand the baton to you. We've had stuff start to kind of unravel after the rate hikes, and I'll let you run with it. We had the B.O.J. announcement, and then a bunch of stuff going on towards the end of the week here.
Yeah, well, I think in general, with the Fed hike a week ago, the markets kind of initially took his comments as somewhat dovish, and I will admit, his body language, his tone was much different than November, and I could kind of see why, from a interpretation standpoint of his tone and body language, why people took it as dovish. But I think if you were to have removed, if you just had to read the statement, it was a pretty hawkish statement. And he was clearly, still in tightening mode. And I think it took 24 for 48 hours for the market to realize that. But since then, equities are down anywhere from 5 to 15%, depending on which market you're looking at. And so it's clear to me that they're still in tightening mode. Now, whether they should be or not, that's a totally other argument. But, Powell seems bound and determined to squash inflation. And if he has to crush asset prices and send us into a recession to do that, then so be it. The other thing is, that you alluded to, and I don't know whether this goes under markets or people losing their minds, but it's the Bank of Japan. And the interesting thing about the Bank of Japan is I think both the Bank of Japan has lost their mind, and I think the people interpreting what the Bank of Japan is doing are losing their mind. Because really, again, if you go back and you read what they said rather than what you want to believe, I mean, they are still keeping monetary policy extremely easy. I mean, this year the yen has rebounded a lot over the last couple of months, but it was down 20 or 25% at one point, and now it's at a 5, maybe a 10% bounce, but it's still down dramatically over the last 12 to 24 months. And it's because of this ultra easy monetary policy. And what they said this week is they came out and they said, listen, we are continuing this ultra easy monetary policy. Not only that, we're going to increase QE. So they're going to do more of it. Now, what they also said, and this is where the losing their minds part gets into it, is that they're going to widen the band on the yield curve control. Now, for somebody who is not kind of versed in this lingo, essentially what they're doing is they're trying to save both the bond market and the currency market at the same time. The problem is to save the currency market, you have to institute policies that will kill the bond market. Or to save the bond market, you have to institute policies that will kill the currency. So I think when central banks come out and they make these big statements, to a certain extent, they're just trying to scare people, and they're trying to scare people out of, fighting against it. And it often works, and I think it worked this week. When they said that they would loosen the band on the yield curve control, essentially what they're saying is that bond prices could move more than 25 basis points, and they could move 50 basis points. Now, if you think about, yields moving 25 basis points, it's not that big of a move. But when you consider that it's only at 25 basis points to begin with, it's double where it was previously allowed to move. So from that perspective, it's a very big move. Now, the other thing you have to remember is earlier this year, when rates went from 0 to 25 basis points, it caused so much havoc in the Japanese banking system that the Bank of Japan had to come out and multiple times reiterate their commitment to keeping yields at 25 basis points or lower, because it was causing all kinds of problems in the Japanese bond market. They weren't trading, balance sheets were upside down, the banking system was in danger of not functioning. And so for them now to come out and say, we are going to let the band widen and interest rates go up even more, the bond market immediately shut down. They had to halt the Japanese bond futures on the Osaka exchange because it went right back to crisis mode. Now, again, people took it as a rate hike, but it wasn't really a rate hike. What really was a loosening of financial conditions. And, monetary authorities will always say, every central bank in history has done this, that we will not sacrifice the currency. We do not want to kill our currency. But in the end, they always sacrifice their currency. And the reason is because they can't save both of them. And when it comes down to it, they have to decide, do we save the banking system or do we save the currency? And again, the reason is the policies that you would institute to save the currency hurt the bond market and vice versa. There's a couple of reasons that they will always end up saving the bond market when the push comes to shove. And part of the reason is that the currencies benefit the individuals the most, whereas the bond market benefits the government the most. So of course they're always going to save themselves before they save the citizens. The second reason is because the bond market is the way the government gets financing. If the bond market were to collapse, then the entire banking system collapsed. So not only do they have another financial crisis on their hand, but they no longer have a way to fund the government. In other words, if the banking system fails and they can no longer sell Japanese government bonds, there's no way to fund the government. And I can tell you, no matter how altruistic you think your government is, they will choose to fund themselves before they choose to fund you. And so this idea but when this announcement came out, the idea that interest rates were going to rise a lot in Japan sent the yen up like 3 or 4%. It's one of the biggest moves in history in the yen. I can only imagine some people that were, had positions on against that got woke up in the middle of the night and were like, what the hell just happened, right? They're probably not having a very good holiday season so far. But I can tell you, in my mind, there's beyond a shadow of a doubt, this will end up hurting the currency as opposed to helping the currency. I can't find any time in history where a central bank had to go in and intervene and only did it one time and it worked. This is going to be an ongoing process, and I have no doubts that eventually the yen will be sacrificed in order to save the Japanese government bonds.
Would you say, though, what's kind of capping on what some of the things you put emphasis on, particularly the government sacrificing the currency to save the bond market, and that ultimately what's most important to a sovereign is the ability to finance itself. It's really interesting to mention that kind of as a theme or a narrative when talking about Japan, because I feel like what used to be the lost decade has turned into the lost 3 decades, through which that time frame they have completely sacrificed the currency, and they continue to do that, almost where the move that they made with widening the band, it almost felt like, they were trying to pretend like they weren't in this, trying to be the front runner of the currency war, right? And so they're such a huge exporter of both goods and capital, and a weak yen serves both of those. In addition to that, they have more or less been monetizing the bond market almost entirely for how long? So maybe you want to add some more thoughts to that, because that's, to your point, it's a valid point. It makes sense. But again, Japan being kind of like the golden example, they've probably ultimately in a free market wouldn't be able to finance themselves at this point. Hence why, the B.O.J. Yeah.
Well, to a certain extent, you kind of got to give them, in a Machiavellian way, you got to give them credit, because, they scared the people that were shorting the currency. The currency strengthened. They probably wanted the currency a little bit stronger, because now that the currency jumped, now the fact that they're doing more easing doesn't hurt them as bad as quickly, right? And so, and again, the madness kind of stems on both sides. It's madness on the government's part, or the Bank of Japan's part, because they think that they can actually pull this off. Again, this goes to the hubris of central bankers, right? They're losing their minds that they think that they can actually pull this stuff off without any adverse consequences. But I was also shocked that the market, I understood it. I understood that the market thinks, okay, interest rates could double. That means that makes the yen, it makes interest rates in Japan more attractive. Capital flows back. You get the yen appreciates. I understand it from a theoretical level, but it's just surprising to me that the market. It's always a little bit surprising to me when the market takes central banks at their word rather than actually looking through it. But this is what makes a market. There's probably a lot of people out there who disagree with me completely and see it the other way, and they're on the other side of the trade. And one of us will be right and one of us will be wrong. But I'll tell you, I added the Japanese yen shorts on that spike.
I was going to say, doesn't it feel? I mean, what does history say, especially over this global tightening cycle? Look what happened with the pound. It feels like this is going to be a bit of a head shake. Like once you have these big types of moves, which are almost feel like algo front running, and people, they get to clear their head and they gather themselves. They can kind of step back and look at the details in more granular fashion and be like, okay, not much has changed here. They widened the band on yield curve control. It's still Japan. They're still monetizing the debt, and the yen is still pretty much, needs to sit roughly where it has been. Do you think this just eventually kind of falls back to where it was?
Oh no, I think the yen is going much, much lower. I think this was the yen fell a lot in the first 9 months of the year. At the end of September, the Bank of Japan had to come out and they had to intervene in the yen market to strengthen the yen because it had fallen so much. I think this was a little bit of again, I kind of give them credit. They know they have to continue their easy monetary policy to get their economy going, but they also don't want the yen to completely fail. And so they came out with this, it's kind of a gamble on their part. It could have gone the other way. And people could have said, oh my gosh, they're increasing QE and the currency could have fallen 4%. It's kind of a very tactical gamble on their part. It paid off. I kind of give them credit for it. But in my mind, there's no doubt that this will end up hurting the yen as opposed to helping the yen. But here we are. This is part of the madness.
Well, and markets love, pundits love. We all kind of have a love affair to some extent with the idea of the word never, particularly when it comes to monetary policy and central banks. They're never going to be able to do this. They're never going to be able to do that. That's been the drum. People were pounding hard this year, and you don't really hear the drum beat as much anymore about the Fed. How do you think some of this rhetoric that you're seeing from the Fed, I think people are digesting it based on what stocks have kind of done this week, maybe correctly finally, that the Fed is hawkish. In taking that, blending it together in the milkshake with the B.O.J. decision, how does the dollar fit into this?
Well, I think, largely the move this year in the dollar was based on interest rate differentials. And the move in the yen over the last week has been based on interest rate differentials. Again, if the interest rates are going to rise in Japan, that makes the yen rally versus the dollar. But I think as we get into 2023, the interest rate differentials will still play a role, but it's going to start to take a back burner to slowing global growth and just lack of dollar liquidity. because we are still in this Triffin's dilemma where Powell is tightening monetary policy in the United States, but the global Eurodollar market still needs looser monetary policy. And so I think again, Powell has been very clear spoken. I think more than any other central banker that I can remember. I've spoken about this a lot over the last 6 months, that he's been very clear what he intends to do. And so far, his actions have backed up his words. He said he's going to raise rates. He said he needs to get inflation down. He said he doesn't matter if the labor market suffers and people lose their jobs. He says he doesn't mind if they have a recession. He would rather have the pain of a recession than a pain of prolonged inflation. He doesn't mind if asset prices have to go down in the meantime to accomplish that. And that's kind of what he's getting. And despite all that, he's gotten rates from 0.5% to 4.5%. He now has a higher federal funds rate than Ben Bernanke had going into the global financial crisis. And so I think he's going to continue to do it. Now, I think, and as he does that, it's going to dry up dollar liquidity in the Eurodollar market. So here's what I think is interesting, John. And this is, you kind of alluded to this a little bit, is that people always ask me, what's the Fed going to do? How's the Fed going to get it out of this? What's the Fed going to do to keep this from happening? Nobody ever asks me, how is the Bank of Japan going to get out of this? How's the Bank of England going to get out of this? How's the ECB going to get out of it? It's always the Fed, the Fed, the Fed. But they are more trapped than the Fed. And because the U.S. is a global reserve currency, we have the ability to get away with these crazy policies longer than the rest of the world, purely due to the fact that there's external demand for the dollar and there's not external demand for these other currencies. And so, it's important to understand what the Fed's going to do. It's important to understand that I think he's going to continue to raise rates. I think he's going to continue to restrict liquidity. I think he's going to cause either a recession or some kind of a market crash. And I think that's going to happen sometime in the first half of 2023. But more important to that is, regardless of what Powell does, these other central banks are in a world of hurt. And the idea that they have any more skills and are able to get out of their trap more so than the Fed, I think, is just wrong. And so I think we're going to start to see that really play out as liquidity in the Eurodollar market dries up in 2023.
Look, we're at 20 minutes now. I want to make sure we stay true to that. But I do have one last question I want to add to that, which is, I think it's a super important point that you kind of like to remind people of in a somewhat antagonistic type of way on Twitter. In all fairness, yeah, occasionally. In all fairness, you do get a lot of garbage thrown at you, so it's good that you kind of swing back with some of those comments. But with that being said, the fact that all the Fed's problems are even bigger problems for the rest of the global central banks, at a certain point, the stronger dollar becomes a geopolitical issue. Probably in this environment, partly because it gives us a lot more elasticity in terms of raising rates, and markets are obviously weaker and under pressure, and the likelihood that there's a recession, et cetera. All of that is real, but man, we have such a clear runway to navigating what those potholes are going to do to us as we kind of traverse that unknown outcome. So as we're going through this ongoing global tightening phase, and you see the B.O.J. trying to figure out where they're going to move their chess piece in all of this, at what point does the U.S. Congress, central bank, the Fed, et cetera, play that reserve currency hand too strong? And I'm not talking about in the full context of the dollar milkshake theory. I'm talking about in this cycle right now. Like, at what point, irrespective of what's going on in the market, does the Fed be like, okay, we're putting our boot on their neck too long?
Well, I think to a certain extent, and I've actually had some meetings with some high-level institutions regarding this, and I know that was already happening to a certain extent in 2022, in the late summer, early fall of 2022. And I think that probably plays into a little bit of the fact that the Fed's tone has eased up a little bit. But I also believe that the Fed has weaponized the dollar, and I think they know how to use it as a dollar, or use it as a weapon. And I think if they need to use it again, that they will. And I think even if they don't want to specifically use it as a weapon, it ends up getting used as a weapon. And we've talked about this before with Triffin's dilemma. I think Fed's number one priority is the U.S. market and the U.S. inflation. Now, as they fight inflation, if that happens to put pressure on the rest of the world and it solidifies the United States' place as on top of the mountain, that's not a bad secondary effect to have. But I think, there's no question in my mind that the rest of the world is going to come under pressure as a result of the dollar getting stronger. And if I'm wrong and the dollar gets weak and they go back to QE, then maybe we'll get a whole other cycle like we did from 20 to 2022. Maybe we'll get in a whole other QE cycle and this whole problem will be kicked down, the road for another couple of years. But I'm just convinced that this is the way this plays out. The only way this all gets resolved is through a stronger dollar as opposed to a weaker dollar.
One last question on that. Do you think the foreign markets, emerging markets, etc., become the smoke before the fire, or does the U.S. go into recession and the rest of the world catches a cold?
No. I don't think that it's possible for the U.S. to go into a severe recession and the rest of the world just gets a cold. I think it's possible for the rest of the world to go into a recession and the U.S. gets a cold, but I just don't think that the other is. Listen, nothing's impossible, but I think the likelihood of that is extremely low. Again, it's very hard to restrict liquidity in the United States, but not restrict liquidity outside the United States. It's just a function of the global reserve currency. And again, this is kind of the heart of the milkshake. And the idea that the rest of the world can go along and have superior dollar liquidity while the U.S. internally doesn't have superior dollar liquidity, to me, it just doesn't work that way. And so, if we end up with a crisis in the United States, I think it will be doubly bad outside the United States.
Well, there you have it, folks. Brent, thanks for taking the mic today and shining some light on what's been going on this past week, putting the Dollar Milkshake front and center on this episode. It's been fun, man. I appreciate it.
Cool. Peace, everybody. Happy holidays. Merry Christmas. Happy Hanukkah. Happy New Year. All that kind of stuff. I guess we get another episode next week.
Yeah, I think we'll sneak a holiday episode in.
Okay.
But be sure to follow us on Twitter at MilkshakesPod. You can find us online, milkshakespod.com. And again, on YouTube as well, the same handle, MilkshakesPod. We're everywhere. We appreciate the comments. We're following, we're tracking them. We had a lot to cover, or at least unpack this week because of the B.O.J. announcement. But we are definitely going to touch on some of those comments that were left. So don't fret. Keep posting, keep sharing your thoughts, and posting those questions and comments. We'll definitely get to them. But again, thanks for joining us, and we'll see you next week. See you, Brent.
See you, buddy. Bye.
Hey,